An office meeting today. We're doing a really small, short meeting, and it's going to be talking about some of the market trends. One, an iPad, some office reminders coming up, upcoming events that's going to be happening for the summer, training. Again, we have a presentation coming in from the real estate investors, and the special guest we have today is with Genworth. So let's move in on to the market trend. As we can see, we all know, I mean, sales have definitely been down, but the good thing is, like they always say, we're doing about 10,000 sales every month on a consistent. Previous month we did 8,000 change, just around 9,000 for the month of April, but we're back, the spring market, 10,000. What does that mean? 20,000 commission checks, right? Buyer, seller, unless you double-ended both of them, but at least that's 20,000 commission checks. That's really minuscule. I mean, if you look at the number, 3.4% is really minuscule. And the reason why I say that, if you've been in the market for the last even 3 years, but let's go back to 5 years, 2008, I'm sorry, when everyone said the market was coming to a crash, the world's coming to an end. But Toronto and Treb, we're just been trekking along. 10,000 sales is impressive. Other parts, if you take major cities or major centers in North America down south, they're not even hitting 10,000. So we're very lucky. I mean, sales are still very positive with only about 3% down. But the good news is those people that are sitting on the fence thinking that the price is going to crash, had you bought last year compared to this year, you're still making a very positive return on real estate investments as an investment, or your property itself. Almost 5.4% is coming in. So it doesn't look like the market is crashing right now. The prices are coming down. I mean, we have a Neil from Scotiabank. I'm sure you guys have heard that rates are starting to go up now. Banks are starting to increase. Nothing to do because of the market. It's really because of the bond market. Mortgage rates is in with the bond market. If you folks follow, and I encourage you to follow this, if you follow the Dow and if you follow the TSX, they've been on a tear for the last 3 to 4 months. You could have made a boatload of money. I was going to use some other word, but you could have made a boatload of money out there in the market also. And because of that, the bond market has taken off. And for that reason, the banks are increasing rates, not because the market is still very good real estate. It's only because the bond market has really taken off. So they need to flatten that. And that's why mortgage rates are going up. Nothing in relation to real estate itself. Let's review some of the charts for 2013. I think everything, as we know, the spring market really took off from March, when March break came into place. It's been skyscrapers and numbers from previous years. So as they say, to know your future, you should look at your past. And if we look at the past, the trends have been, June certainly is looking just as like a skyscraper again, when really from 2009 onwards, this is only 2010, but since then, but the second half is always very fruitful also. So you can still be able to get a lot more businesses. Some of the people I've heard, they still do a lot of businesses all the way up till this time over here in December. So yes, there are still ample time, ample opportunities out there to make money right now in this business. It's not like, hey, the summer season is over, there's no money to be made. No, absolutely not. There's definitely time to be made. So I definitely look at that and get people on that the bandwagon, especially get them back in the back of the seat right now. Start showing them properties, because school is going to be over. The mind's going to be focused on let's get something rolling. Definitely opportunity. Even if you're looking at listing, definitely is opportunity out there for listings. Never slows down. Business is certainly there. New listings, as you can see, even in the month, the second half of the year, it pretty much stays right in line with the first half of the year. Listings are there. We just got to go out there and find the listings. Yes, probably not further apart, but if you look at the next 3 months, July, August, September, June is over, there's still ample opportunity of listings. So definitely, there are people still selling. Definitely there's people buying. So there's ample opportunity for listings also to get out there. So I wouldn't shy away and say, hey, nah man, first half is over, the summer is over, the spring is over. No, definitely not. There's opportunities. I mean, if you look at everywhere, York, Dufferin, the Toronto and Peel region, I guess some of our biggest focus is there's listings coming up every day. If you're not getting it, someone else is getting it. And why not you and I basically getting that money? So definitely there's an ample opportunity for listings also in the second half of the year to get things. And what I've noticed is that from past experience, and you were talking about that, Omar, correct me if I'm wrong, when you price it right, things sell. You know what I mean? This time, if you price it right, things will sell, guys. Life is really easy on that then. Let's get those listing, you know what I mean? Ratios to new listings, things are still selling in the second half. This is average sale prices we've seen. The average sale price is certainly been exceeding every single month going back to 2010. And I'm sure it's going to be basically, again, very positive for the month of June. Doesn't look like average prices are coming down. An example that you just said also. So average price is not coming down. If people are thinking that, hey, things are going to come down, prices are going to drop, it doesn't look like that in the short distance future right now. Even with the small changes in mortgage rates coming in, it doesn't look like that happening right now, currently speaking. So definitely, I would share this with your clients who's sitting on the fence maybe, but hey, it doesn't look like that happening. And even if the rates do go up, you're going to be hit with the extra few payments per month. $10, $15 is what that would be. Absolutely. Time series, again, everything's in line. I want to go through this quickly, but this is monthly time series. So again, things have basically an average selling price going back to 95, and we see this on a monthly basis. The only blip we had was back in 2000 and 2009 when the market slowed down a little bit with the US crash, but we have not seen anything really coming down drastically. Please come on in. So really, it's still basically looking like it's trending, and this is a gradual growth. I use this as a gradual because you don't want to see a major jump in pricing. Other parts of the world has had some massive changes, massive growth, 15-20%. Dubai, I remember in before the crash was 2005, 2006, or 14, 15, double digits and everything like that. We in Toronto are seeing single digits, 3.4, 5%, which is very healthy growth, sustainable for a long term. You don't want those double digits. I know as an investor you might think that, hey, that's excellent, but no, slow growth, slow and steady wins the race, like they say, and that's exactly how this would be. I mean, it's very sustainable in the long term, the way the market.
No, you have to hide me.
Again, this is a very important slide that we use again. Again, it's just under 35%, and I say this every time, is that, so if you had $100 back in 87, that $100 would go, about $50 of that would go towards paying your mortgage, property, and utility. But today, that's just to show you now. So even now, with that $100, $35 odd dollars is just going to pay that. So the affordability, according to this Toronto Real Estate Board and Stats Canada, affordability is still there. Even with the blip jump in the mortgage rate, even with the price escalating, right? The affordability is there. And that's what's happened right now. I mean, think about it. I mean, our children will be making more money than we used to. Not just because I'm saying because of the minimum wage has gone up, but the scale level has gone up. If you got better education, you get paid well also out there. So for that reason, they say the affordability, we're still very affordable in Canada. Toronto in particularly, compared to a lot of the pockets in the world. I know for a fact I was in London last year. It's ridiculous. A house you take that's in the Scarborough area, just down the street over here, $450, $500. That same house over there is $1 million, converted $1.5, $1.6 million, 800, 900,000 pounds. So when you convert that, we're still very affordable. You know what I mean? Yes, London is definitely on the level itself, but we're still very affordable compared to that. Absolutely on that.